So we're still looking for that top in gold price. If anyone sees it, be sure to let us know. So yesterday we got inflation numbers, and CPI showed a rise of 3.5% year over year. So that means that we're still outpacing Wall Street expectations, and we're still well exceeding the Fed's 2% target. So if you think about gold as an inflation hedge in the simple sense, you might think that higher inflation would push gold prices higher, but the relationship between inflation and gold prices is actually more or less the opposite right now. Now, how would that make sense? Well, the reason is wrapped up in Fed rate policy. Higher interest rates mean higher yields for Treasury products that compete with gold. So the higher the yields of other products, the higher the opportunity cost of holding gold. Now, higher inflation means rate cuts are pushed out further, and that would mean gold price would drop. But it didn't. Before we get into it, though, if you're looking for gold or silver, check out SD Bullion. New buyers even get gold or silver for spot. That's sdbullion.com/new. Well, technically, it did actually drop. Gold price dropped a little bit after yesterday's news, but not even enough to say a whole percent. Now, today, gold price is hanging out around $23.40, so that's within 1% of all-time highs. And all this is coming off hot inflation and then a revised expectation for those rate cuts, when they're going to happen. Now, according to the CME FedWatch tool, the market is now pricing in 2 rate cuts for 2024. That's down from 3, and most likely not starting until September, which is pushed back from late June. Now, the reason that any of this matters here is that all of that should be bad news for gold. And if you take away one thing from this video, this should be it. Gold just put in a new all-time high, and if you were an analyst, you would say that it was looking for a top. Well, usually when we see that, the price of whatever asset that we're looking at then pulls back. So price discovery finds a top, pulls back, and then it goes at it again. Well, in this case, add some bad economic news that would normally directly and negatively affect the asset, and you would expect to see a significant pullback. But that's not what we're seeing. Now, I'm not saying that we're not going to see a pullback. I think we will, but just looking at price movement, gold's recent push to $2,365 does not seem like our top at all. And if it did, we'd be seeing that pullback happening right now. So we're back to that idea that gold is on a run, and there's more driving it than the usual factors. So it seems like we have our direction, and then we have reasons being thrown out explaining all of it. And explaining all of it, that's probably not the right way to say it, because one of the things that I'm noticing lately, well, 2, is that first, we're seeing the wild price forecasts getting louder. And then second, some of those seem more feasible because of the current run. Now, here on YouTube, you're going to see people using 1970, the good old days, as a case for what should be normal. So anyone not looking back 55 years is suffering from a case of recency bias. Gold should be $3,500 because of X, or gold is going to be $8,000 because of Y. Y might be something like, there was this much money in circulation in the 70s, there's this much money in circulation today, so gold should be $8,000. Great, that sounds great, but the market is not going to wave a wand and just take us back to the good old days. So the reason for the run is not some kind of cosmic rebalancing, it's central bank buying. It's really as simple as that. We've been talking about it for a while. We can see the data showing historic central bank gold purchases, and then we can always guess at the reasons. Countries don't want to be overly reliant on foreign currency reserves, like the US dollar. So we're kind of in a weird place where the people with the made-up formulas and the moonshot predictions almost seem to be right, and then the people looking at actual factors that affect price, like Fed policy, they might seem to be wrong, because this unpredictable central bank buying is pushing everything up. So it's really kind of a strange time to try to wrap your head around it all. You know, one thing that I've always thought, though, is that I don't have to fully understand a thing to benefit from it. I think it's Warren Buffett who says, don't invest in what you don't understand. And well, I think that you can understand certain fundamentals that give you enough understanding to just get on board. I would say gold goes up over time. That's that basic understanding. That seems like a good way to save to me. Now, sometimes gold veers a little bit, like what it's doing right now. And since I'm not looking at it like a trade, I'm not going to get too caught up in that. So I feel like I need to give that bit of background, that there's a lot of bad information out there. There's a little bit that none of us really know. But based on the charts, Gold does not look like it's found its top. I think that's the important part here. Really, it looks like it's just getting started. We have central bank buying. That's the unknown, but I don't know of any reason for that to stop either. And that's the part that I'm not going to try to predict. None of us can. We can make some guesses, though. And then as far as Fed policy goes, interest rates and inflation, what we're seeing today with gold price shrugging off what should have been downward pressure on it is one more bit of proof that it's not ready to slow down. We're looking at a market that's still excited for eventual rate cuts, even though they keep getting pushed out. So I think it's safe to assume that the market's going to be more excited when it actually happens. So I guess where I'm going with this is maybe you don't have to be Warren Buffett to make a call on gold. Really, I doubt many of us here feel like we're investing in it. That's really where his advice was going. So probably more we're diversifying into it, just trying to balance things out, balance against other things that nobody can really understand, but seem to be going a certain way. Let's call it good there. Let us know what you're up to, whether you're buying, if you're giving up on these pullbacks and just aping in. Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. We're coming up on 100,000 subscribers here, and I know that's a little bit of a vanity stat, but it's a big thing to me. I appreciate all the support here, and we're going to be announcing a giveaway once we're there. That should be coming up soon, so be sure you're subscribed with those notifications turned on if you want to hear more. And if you're still here, thanks again for watching. I always appreciate your time. Take care.